Hi, I'm James Kirby, Managing Editor of Eureka Report. Welcome to the first in our Acumen series. Is the resources industry ready for a revival? Today I'm talking to Justin Braitling, Principal at Watermark Funds Management. Hi Justin.
James, how are you?
Now I want to start first of all by just talking in general terms about the resources industry to you and your view as a fund manager about where it's going and whether it has in it the potential for a revival at this point in the cycle.
Well, I think we're in a bear market for resources generally, and I actually think, sadly, that we've seen the revival. We've seen a recovery phase in the commodity names and in recent months, and I think that's probably as good as it gets. And the iron ore price has been a good proxy, and it's rallied hard with the seasonals.
Yes.
And to be fair, steel demand in China has been a bit stronger. Industrial activity in China has been a lot stronger.
Iron ore at 130 when even Rio was talking about 80 or 90 some months ago. Isn't it at the top of the expected range?
That's right.
So if it's a proxy, isn't it, how does that work?
Well, it's time to sell. That's the reality of it.
Right.
You've seen a seasonal restock, and we've seen this pattern occur every year for the last 3 years. The seasonal restock peaks around the October holiday. Then they all come back from the October holiday, and the mills and their orders haven't been particularly strong. I'm not sure if you've noticed the rebar price has been drifting lower. Right. They'll come back in the next week and they'll cancel shipments.
And does this then have a ripple effect across the entire resources industry?
Well, I think iron ore has been seen very much as a proxy.
Is it a proxy?
Is it a proxy? No. I mean, we have the view that different commodities have different fundamental picture or outlook.
We could just keep on the general for a moment. So we talk about BHP and Rio. They are still largely diversified miners, and they do represent a diversified commodity space. You think that it has got to its best point, do you?
For those companies, they are actually, Rio is predominantly an iron ore name. About 75-80% of the profits are iron ore. BHP clearly is more diversified. Yeah. But in terms of the complex of resources, are we seeing an uptick here in broader demand? We're seeing some recovery in activity in China. A lot of infrastructure projects were put on hold last year. That they've re-engaged in those projects this year, and you've seen that in infrastructure investment in China. Yep. But we haven't seen a subsequent raft of new projects come through, and we're not expecting another further stimulus package. So we think this is it. This is as good as you'll get.
Okay. So one last thing. What you'll need to see to be convinced of a genuine potential revival across the resources industry is a new project stream in China.
Well, there's two areas that lead to demand for bulk commodities. Infrastructure and residential property development. They're the two big areas. Together they're over 50% of steel demand. And so we talked about the infrastructure piece. Now property demand, we have seen an uptick clearly in property as well. Property sales are up, starts are up and so forth. But the social housing program starts to roll off, and as with infrastructure, we think we've seen an uptick and to a more active level, a higher level of activity, but we don't see that accelerating further. In fact, with residential property, we think that'll roll off as well as we complete this year and move into next year. So we think, there's been an uptick clearly, but we're not looking for the sort of recovery that we saw back in 2009, 2010.
Thank you, Justin.